Hey everyone, welcome back. We're going to be talking about a company that we chose as one of our top picks for 2024, Shift 4 Payments.
This is another one in our small cap basket of stocks. Last video, Monday.com. Another one of those. Shift 4, it's another one that we really haven't given proper coverage on the CSI YouTube channel, but we do talk about it quite a bit. And the whole digital payments ecosystem or industry, for that matter, over on our Discord channel. And one of the points that we mentioned in passing a couple of times, including when we finally took a small position in the stock a year ago now, was it's kind of an ancillary bet on Elon Musk's SpaceX, specifically the Starlink service within SpaceX. Casey, I can hear the comments already. Clickbait. You guys suck. This is clickbait. Garbage video.
Oh, that's really harsh. We're not trying to be clickbaity. These are facts.
For those that you don't know, clickbait is when there's a really saucy headline and there is no usable information inside of it. So we're going to try to give you actual usable data here. Okay, Shift 4. Casey, tell us the story.
Well, Nick, what story would you like me to tell about Shift 4 Payments? I see this red circle and this green circle. The red circle is this general timeline between 22 and 23 when I think we started purchasing it. And I believe this green circle is where we are now.
Okay, good story. Let's maybe go to a more usable slide. Yeah. So this is another one that I think, again, we have some public articles still floating around out there. We actually took a hard pass on this one when they had the IPO about 3 years ago, but warmed up to it last year, started covering it again in 2022, finally made a purchase about a year ago. And the story here surrounds this particular vertical that Shift 4 has, historically focused on and still one of its fastest growing verticals. On the left, hospitality venues, restaurant venues, and then via acquisition, big stadiums. It seems like every month there's a couple new announcements of these very large entertainment venues switching over their legacy digital payments providers over to Shift 4's platform.
The addition of all of these huge venues, the hospitality industry, all of these new endeavors from Shift 4 is definitely having an effect on the numbers. You can see by all metrics, Shift 4 is progressing. But Nick, it's not just digital payments. Digital payments are a commodity. Two of our oldest holdings, Visa and MasterCard, they have been the stalwarts of digital payments.
Yeah, there's been a lot of debate about this, about the price race to the bottom in digital payments as a result. But Shift 4 has been trying to communicate the sort of maybe disingenuous parts of that conversation that have been going on. If you're a legacy digital payments provider, you kind of just sit atop the Visa and MasterCard infrastructure where all digital payments ultimately kind of run back and forth with a few exceptions. And if all you're doing is enabling acceptance of a digital payment for a merchant, yes, you are going to compete on price. But a lot of these newer companies like Adyen and Stripe, just two examples that you mentioned, Casey, there's really this convergence between the digital payments, basic commodity service with software services. And that's where Shift 4 has been focusing. It's been solving a lot of pain points. First of all, it likes to boast that it has very, very low cost and quick setup for a lot of its partners in hospitality and restaurant management. And they've been able to move up market to land bigger deals like those stadiums by layering in more software. So very high level picture. The founder of this company, Jared Isaacman, talks a lot about this. There's some really good interviews out there you can find where he discusses this. And so I think it's probably both things working in Shift 4's benefit. Low cost and easy setup for the digital payments basic service and more software. So kind of a convergence of the two things together.
Shift 4 has also been doing some acquiring of other small businesses in order to accelerate their growth. They've historically been primarily in the United States, but they just completed this acquisition of Finaro to expand more into Europe. And later on in this episode, we'll talk about how Shift4 is planning on expanding to even more locations.
Good point here on the acquisition strategy. Finaro, one of the big recent ones. And then here, just a few days ago, before we recorded this, they announced yet another acquisition of digital gift card, digital loyalty, and other point of sale solutions acquisition. Less than 200 million US dollars. This acquisition, GiveX, based in Canada, something like 130,000 locations use these e-gift card and digital loyalty programs from this company. Shift4 has this process that they use where you can almost think of this as like a type of digital payments private equity company. We're going to show you what that looks like in terms of the balance sheet here in a moment. But in their latest shareholder update letter, they kind of break down this formula where they're looking for a very, very cheap way to acquire lots of new customers. And when they do that, here's two that they've acquired in recent years: Focus and then Venue Next. Venue Next being one that helped them launch into the large entertainment venues. They're really not afraid of, once acquiring those customers via these small, cheap acquisitions, of blowing up the existing revenue model and then rebuilding it around what they have working for them at Shift4. And so they pay the cheap price up front. It doesn't really contribute to growth very much the first year or two. But then as they rebuild that customer acquisition around their model, then you get the big boost in revenue, maybe 2 years down the road. And then also on top of that, a more profitable, more sustainable business that Shift4 is going after. So, this is not a popular strategy all the time. Oftentimes there's, integration partners that are unhappy because they have to kind of rework what they're doing. If Shift4 comes in, makes an acquisition and, blows up the revenue stream, these guys are sharks. They know what they're doing. And I think that's kind of an important feature of this business, to kind of think of them as a little bit like a private equity like vehicle, kind of packaged up as a smaller player in digital payments, almost kind of like what Broadcom has done for several decades now in semiconductors and more recently in software. As a result, though, this is one reason why the market maybe views Shift4 as a bit of a higher risk. The balance sheet, not so pretty.
This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high yield cash account, offering an industry leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more.
That's absolutely true, Nick. Long-term debt has stayed pretty steady at $1.7 billion, with cash dwindling all the way down to $205 million, and their long-term investments clocking in at $73 million currently. So this is one of the reasons why there's been some consternation maybe with investing in Shift4.
Mm-hmm. Yeah, and that's in spite of the company proving its model actually does work from a profitability standpoint, especially.
Let's double click on that.
Wow, you sound like a real Wall Street analyst.
Shift4 has proven that profitability is possible with this method. Net income in the most recent quarter, just over 39 million, free cash flow up to $92 million. You can see that's a little bit lumpy, but because of these acquisitions. Now we're going to get to the Starlink portion of this video. I don't know how I feel about Jared Isaacman hanging out with Elon Musk all the time.
If it makes the business grow, I wouldn't say that they're hanging out, maybe per se, but there is definitely a relationship between SpaceX and Shift4, which sounds weird. How in the world would a digital payments and software business have anything to do with a rocket launching and satellite network business?
Payments on the moon. Oh no, payments on Mars. Payments on Mars.
There you go. Maybe someday. But there is a connection drawn here on this little chart. There's always like this little satellite that they show on the map. of their international expansion as of late. We're going to use Albania to illustrate this because in the last shareholder letter, Albania got a mention. Not the first time we've talked about this country, but you can see they're on Wolt. They're in the bottom right. That's like Europe's big food delivery business. Shift4 is powering digital payments in Albania for Wolt, who recently expanded food delivery services to that country. We're going to come back to this in kind of a roundabout way. This is interesting. So this kind of feeds into some of the international expansion, where, of course, there's a lot of legacy players, but especially in emerging markets, a lot of markets out there still very, very underserved by the digital payments and e-commerce industries in general. Companies like Starlink from SpaceX hope to bring internet access to more parts of the world. So that's obviously, a must-have if you're going to develop any sort of digital industry whatsoever in a country. And Shift4 helps power Starlink's commerce and telecommunications network. Used our VPN on this on Starlink's website to get this. A place, let's say Albania. In a recent interview, Isaacman had also mentioned like entry into South Sudan and a lot of countries in Africa. For a lot of businesses, they just may not have access to reliable, high-speed internet. And so that's a good starting point. And SpaceX's Starlink, or maybe Amazon's Project Cooper working on something similar with that, might be a way to get cheap access with minimal investment for Starlink. Less than $90 a month, total hardware costs of around $400. You have high-speed internet where maybe you didn't before without getting an internet service provider needing to lay down lines out into your remote location.
Just as a clarifier, however, Albania has wonderful internet infrastructure. For all of you digital nomads that have any interest in checking out Albania, we have checked it out and they do have some great internet. So Starlink may not be needed, at least in the major cities.
That's a good point, Casey. But, for a lot of these countries, that's just the first building block is the internet accessibility. Now, how do you get people to start using the internet for more than just like checking Facebook or Instagram or TikTok or FaceTiming your family? How do you get businesses to actually start using it? Well, once the internet infrastructure is in place, then you have these companies that provide a service or some sort of product or solution. Now they can come in and start offering these services. And that is what can kind of start to jumpstart a digital ecosystem. Maybe eventually some of these countries where maybe there's no traditional banking industry. If enough people start wanting to use digital services, someone's going to come in and they're going to start a digital wallet that kind of bypasses and circumvents the traditional banking system. And then you kind of start to get these small shoots of new growth where a digital economy starts to grow and begins to flourish, completely circumventing all of the more traditional infrastructure that maybe was built in a place like Western Europe or the United States and Canada, for example.
If you haven't caught our last video on Monday.com, another software company that is building its moat, just got to get that in there. We talked about the valuation with Monday.com. It was very high, really, especially in comparison to Shift4. Not that these two companies do similar things at all, but they ultimately are software companies. And Shift4 has a very reasonable valuation. On a forward-looking basis, price to earnings 18, 19 times, and on a price to free cash flow 14 times. This one does feel too cheap to ignore.
Yeah. And, the inherent risks with this is the company is very young and in the early stages of turning a profit as a public company. There's a lot of history here. Before it was a publicly traded company. That's a completely different story. But the market is discounting this one because of that. Still very low profit margins and that very large burden of debt, which is probably going up. Didn't mention here, there was some new debt taken out ahead of that announced acquisition of GiveX. So this is the bear thesis. And so far, that's kind of been the thesis that has ultimately been winning out, even though the stock is up nicely off of the bear market lows from a couple of years ago. Shift4 still very much kind of a high risk business, and it's being reflected in those cheap valuations, I would say.
We've talked about all kinds of things from sports venues to hospitality to going to Mars. So I think we just need to recap this episode so everybody gets the main key points. The first point is Shift 4 has plenty of room to displace other legacy digital payment systems with the addition of software along with that digital payment infrastructure. Second point, proven track record of private equity-like merger and acquisition. As we showed you on a previous slide, Shift4 has made a ton of acquisitions. They've blown up the business model, restructured it to fit their personal needs, and have been very profitable in doing so. Shift4 is also expanding into new markets. They have a key integration with SpaceX's Starlink to bring internet to the masses. They're the only digital payments system for Starlink, and they have a big margin expansion opportunity and a valuation expansion that could follow.
In closing, I guess I just mentioned one more time, this is in our small cap basket of stocks. Small businesses, by our definition, small in comparison to the very large market that they play in. A small business that about a couple dozen of which that we hold with the hopes that they can eventually organically grow into a core position, a core holding 3 to 5% or larger of our entire portfolio over time. So again, we just briefly mentioned this in the past. We parted ways with our longtime holding in PayPal late last year. Still very much happy with Visa and MasterCard, but that's very much an infrastructure investment, not a digital payments and software play. Shift 4, we were looking for, who could be that next big hit in 5 to 10 years from now. And we're very happy with the progress thus far, even though it has been kind of a bumpy road here as of late with lots of noise. There was talk about Shift 4 possibly getting acquired, then it wasn't going to get acquired. Now there's more acquisitions. There's going to be more noise. But so far, so good, in our opinion.
I think we should close this episode out by saying safe travels to Jared Isaacman and crew of Polaris Dawn. I believe it's been delayed a couple of times due to bad weather, but they're scheduled to leave anytime, from what I understand, if the media is to be believed. We're excited that you get to go.
And optimistic that you'll return because it's not a Boeing mission.
We probably should not touch that subject here on Chipstock Investor. That's a touchy one. Boeing's a mess right now. Make sure you hit subscribe. Check out our Semiconductor Insider, just $5 a month. Gets you access to our Discord server, live Q&As, all of our video notes, lots of exclusives and benefits. It is the exclusive home of all of our content. So make sure you check it out for $5 a month. Take care, everyone. We'll see you again soon at Chipstock Investor.